15.3 work together is a statement of stockholders' equity. This is a relatively short little thing that you do, and I'll kind of try to highlight where people make mistakes often. First thing is the title. It's going to be Interstate Tires, Inc. Statement of stockholders' equity on the second line, and the third line is going to be for the year ended December 31st, 2014. Next line is capital stock. There is no number associated with that. On the next line, again, there is no numbers associated with it. This is the dollar per share, and in this situation, it is $1 per share, and that's all you type in there. On the next line, you are going to type in January 1st, 2014, and this one does vary, and it's going to be, in this situation, 1,000 shares issued. There is a number associated with this one, and it is 100,000. And how we get that, and it goes in column 2, we take the dollar per share, $1 per share, times the number of shares, which is 100,000, and we get $100,000. Next line, issued during current year, 10,000 shares. Again, this is in column 2. We take the number of shares, and that 10,000 varies because it on the situation. We take 10,000 times $1 per share, and that's how we get $10,000. And then the next line, which is really the final part of capital stock, balance December 31st, 2014, 110,000 shares issued. That is 100,000 plus 10,000. That's how we get 110,000. And then we're in column 3, and that's where we add the two numbers in column 2, and that's how I get $110,000. The next line is retained earnings. No number associated with that. Underneath that is balance January 1st, 2014. That number comes from the worksheet, and it's the retained earnings number on the worksheet for Interstate Tires. And that is going to go in column 2, $46,599.48. Underneath that is the net income after federal income tax for 2014. You can either get that off the worksheet, or you can go back to 15.1, and it's that $62,907.35. That goes in column 1. Less the dividends declared during 2014. That also goes in column 1, and that's $8,800. The net increase during 2014 is the account title next. This is going to go in column 2, and we subtract the two numbers above, so $62,907.35 minus 8,800. This goes again in column 2, $54,104.35. Next account is balance December 31st, 2014. That number is your balance on January 31st and your net increase added together, and that goes in column 3, $100,706.83. And then the last thing, and you do highlight this, total stockholders' equity on December 31st, 2014. We add up the two numbers in column 3. You should get $210,706.83. The only thing that can potentially change is if you have a net loss, and then you would have a net decrease during 2014. But we do not have that happen very often. That is 15.3 work together.